everyone. Welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of Chapter 4 from the book How to Swing Trade by Brian Pazim. It has been created with the help of AI. The chapter is titled Financial Instruments for Swing Trading. You can read the original post at samfury.com.
All right, so are you ready to swing trade?
Let's do it.
Today we're going to be looking at different financial instruments and seeing which ones are good fits for swing trading.
Yeah, and that's really the first step, figuring out, what you want to trade with.
Exactly. And the source material we have for you today is from this book, How to Swing Trade. And it's a whole chapter.
A whole chapter, yeah, breaking down the different options.
So let's start off with, I think, maybe the most obvious one, individual stocks.
Yeah.
And, you see a company like Tesla or Apple or something like that, you think, oh man, if I could have gotten in on that a couple weeks ago.
Yeah, exactly. But that's where that single event risk comes in.
Yeah. What is that? Remind us about that.
So, imagine you bought Tesla right before Elon Musk tweeted something crazy.
Oh, yeah.
And suddenly your swing trade's way off.
Yeah, one tweet can just completely tank a stock or, make it skyrocket, I guess, too. But that's really hard to predict.
Yeah.
Especially, with someone like Elon Musk. I actually got burned one time on a biotech stock. It was, I was feeling pretty confident, too. And then their clinical trial failed. And overnight, it just plummeted.
Yeah, that's the thing with individual stocks is you're really just betting on that one company.
Yeah, and it's concentrated.
It is. And it's great if they, exceed expectations. But if anything bad happens.
You feel it.
Yeah, especially in that short time frame that we're talking about with swing trading.
So maybe individual stocks are not for everyone.
Right.
So what about something that's a little bit more diversified?
Well, in that case, ETFs might be a good option for you.
ETFs, exchange-traded funds. So those are like baskets of assets, right?
Yeah, think of it like you're interested in renewable energy, but you don't want to pick one solar panel company or one wind turbine company.
Well, what if they get sued?
Exactly. Or some regulation comes in and tanks it. So if you have an ETF that's tracking the whole renewable energy sector,
you're more diversified. And I remember we were talking about this earlier, too. It's like, if one company's stock drops 20% because whatever, a battery fire or something, your ETF that tracks that sector might only go down a tiny percent.
Exactly, because it's balanced out by all the other companies in there.
That's a good point. But hold on a second. You mentioned earlier leveraged ETFs.
Right.
Now, what is the deal with those?
Okay, so leveraged ETFs are like using a turbocharger on your car.
Okay, I like that analogy.
You get to top speed faster, but any mistakes you make are also way worse.
Oh.
Yeah, so they use debt and derivatives to magnify the returns.
So a 5% move in the market?
Could mean a 10% gain for you or a 10% loss.
Ooh, so higher risk, higher reward.
Exactly, and definitely not for the long term.
Gotcha. Okay, so we've talked about individual stocks and ETFs. What about currencies? Is Forex trading a good option for swing traders?
Forex is really a whole other animal.
Okay.
It's the largest and most liquid market in the world. You need a deep understanding of global events, macroeconomic trends, and technical analysis to be successful with swing trading in the Forex market.
Okay, so we'll put a pin in that one for now.
Yeah, we could do a whole deep dive on Forex.
Maybe we should.
Yeah.
But for now, let's move on to something that is also very volatile.
What's that?
Crypto.
Ah, yes, everyone's favorite.
Bitcoin, Ethereum, Dogecoin. These are in the headlines all the time, and we know that they swing a lot in price.
Right, and that can be good and bad.
Yeah, so how does that play into swing trading?
Well, it creates a lot of opportunities, but also a lot of risk.
Also, high risk, high reward.
Exactly.
Okay, so we've done stocks, ETFs, currencies, and crypto.
We have.
There's one more that this book, How to Swing Trade, talks about, and that's options.
Yeah.
And we know that those give you the right, but not the obligation, to buy or sell something at a certain price.
At a certain price, right.
But how do they work with swing trading?
Options are really versatile. You can use them to bet on whether a price will go up or down.
So if you think the price is going to go up,
you would buy a call option.
and if you think it's going to go down,
You would buy a put option. They're also very complex.
Okay.
You're not just betting on the direction of the price, you're also factoring in time decay,
Yeah.
implied volatility.
there's a lot.
A lot.
So maybe not for beginners.
Not for beginners.
I think the big takeaway is that choosing the right instrument for swing trading is about more than just, how much money can I make? It's also about your risk tolerance,
Yeah.
your financial goals, and how much time you have.
It really is finding the right tool for the job.
So, dear listener, think about which one of those instruments sparked your curiosity the most and why.
Yeah, it's really cool. There's no one best, perfect instrument for swing trading, just like there's no one perfect trading strategy.
You got to find what's right for you.
Exactly.
So let's say you're brand new to swing trading, you got a couple $1,000s to invest. You're okay with a little bit of risk, but not a ton, and you also have a pretty busy life.
Right.
What would you recommend?
I would probably point them towards ETFs.
Okay.
They're relatively easy to understand. There's that diversification built in.
Yeah.
And you don't have to constantly be watching them.
Right. And plus there's so many different ETFs out there.
Oh, yeah.
If you like clean energy, there's an ETF for that. If you like tech,
Exactly.
there's an ETF for that. So you can really...
Whatever you're interested in.
Yeah, you're basically betting on a sector as a whole instead of picking individual stocks.
Exactly.
And they trade like stocks, so you can still, ride those swings.
Yep.
Okay, so, but let's say our hypothetical trader here, they're feeling a little bit more adventurous.
Okay.
They got a little more experience under their belt, maybe a higher risk tolerance, and they're, looking for those bigger gains that individual stocks can offer.
Yeah.
What's your advice?
Knowledge is power. Do your homework
Oh, yeah.
before you jump into any stock, just because it's in the headlines.
Right. You got to understand the company,
Yeah.
their financials,
Yeah.
industry, all that good stuff.
And that's where technical analysis really comes into play.
Yeah.
So no matter what instrument you're trading, being able to read those signals is crucial.
So it's not just about picking a company that you think is doing good things.
Right.
It's also about understanding, when to buy, when to sell based on those patterns.
Yeah, exactly. And that takes practice.
Yeah, for sure.
There's lots of resources online to help you.
I'm sure.
Yeah, everything from free articles to paid courses.
Yeah.
So it's all about finding what works for you.
And starting small, right?
Yes, don't bet the farm.
Don't put all your eggs in one basket.
Exactly, especially when you're first starting out.
Even if it's a shiny basket.
Especially if it's a shiny basket.
So let's say our listeners all right, ETS. Those sound pretty good. I think I want to explore those a little bit more. What's the next step?
Okay, well, first, you got to dive deeper into some specific ETFs.
Okay.
Remember how we were talking about sector-specific funds?
Right.
If you think artificial intelligence is the future,
Yeah.
start looking into some AI-focused ETFs.
Wow.
And really get into the details, look at their holdings, their past performance, their expense ratios.
Once you find an ETF that you think you like, then what?
Well, then it's time to swing trade it.
Okay. So you don't just buy it and hold it.
Oh, no, you're not looking to hold it for years.
Right.
You're trying to find those points where the price is going to swing upwards.
In the short term.
In the short to medium term.
And that's where the technical analysis comes in, right?
Exactly.
All those charts and indicators.
Yep.
You got to spot those buying opportunities, know where to set your targets and when to get out.
Right. And there's tons of different strategies you can use. Some people look at moving averages, others use candlestick patterns.
Oh, wow.
Some even use algorithms.
Oh, cool. So you can get really sophisticated with this stuff.
You can.
All right. So, but let's say our listeners more interested in individual stocks than ETFs.
Okay.
What would you tell them?
I would say the same principles apply, but you just got to do even more research.
Oh,
to really understand that specific company.
So their financials, their competitors.
Yeah, what's their earnings projection like?
Oh, yeah. Are they coming out with any new products?
Exactly. Are there any regulatory changes coming down the pipeline?
So basically, if you're going to swing trade Tesla,
yeah,
you better be following Elon Musk very closely.
You really should. But the point is you're taking on more risk. So your due diligence has to be even more thorough.
And don't forget about risk management.
Oh, yeah. Never forget about this.
Set those stop loss orders.
Especially with those individual stocks that can drop really quickly.
Good point. Good point. Okay, now what about our listeners who are I want to get on that crypto roller coaster?
Yeah.
What's your advice?
My advice is buckle up because it's a wild ride.
Yeah.
Crypto is volatile. It's unpredictable. It moves so fast.
24/7.
24/7. So before you even think about swing trading Bitcoin or Ethereum or anything like that,
yeah,
you got to learn about the technology.
Right. The terminology.
All of it.
The risks.
It's a whole new world.
It is a whole new world. So don't just jump in because you hear stories about people making money.
Yeah, you really got to understand what you're getting into.
Do your research.
Absolutely.
All right, so we've given you a taste of the swing trading possibilities here.
We have.
But remember, this is just the beginning.
Right.
There's so much more to learn.
Oh yeah, tons of resources out there.
Books, websites, forums, all sorts of stuff.
Communities you can join.
Yeah.
Learn from other people.
So keep learning, keep experimenting, and find what works for you. But most importantly, remember, swing trading is risky no matter what instrument you choose.
Right.
So don't invest more than you can afford to lose, and always be cautious.
Absolutely.
Well, that's all the time we have for today. Thanks for joining us for this deep dive into the world of swing trading.
It's been fun.
Happy trading, everyone.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries. You can also get any of Sam's books and other exclusive content. It's all completely free at samfury.com.